Good morning, good afternoon, good evening, traders from across the globe. Welcome to the Short-Term Trading Live with Oscar. All right, traders, we're here. It's Friday, December 5th, 2008. We are in a bear market. And, you know, we did a video a few days back. And in that video, I drew the board like it is behind me now. And I mentioned to you that we had this formation of a head and shoulders and then a parallel channel, which led to an inverted head and shoulders and a parallel channel, which led to an inverted head and shoulders. And I drew in a parallel channel that wasn't there. And I said, let's see if we actually just follow in suit and go into that channel. With that in mind, traders, this is that very same drawing. And here you will see that we had the head and shoulders and the parallel channel. Then the head and shoulders, the little pop out of it, just a little one, and the parallel channel. Then an inverted head and shoulders, a little pop out of it, and we left off right there. And then what I did was I drew in this red parallel, which was equal just like this one, same angle. I copied it, I dropped it here, and I said, let's see if the market stays within that parallel. The indicators are bearish. You popped out for a couple of bars just like you did here. Everything was set up, and again, head and shoulders parallel, head and shoulders parallel, head and shoulders. Why not another parallel, right? That's what I said in the video, just the last one. What was the date of that video, Mike? The 2nd, 3rd, 12:03, 12:02, a couple of days back, the beginning of the week. So I drew in what you see here, but these bars don't really exist. And what I said was we should probably trade in that parallel just like we did back here. We should do it here. Now, it looked like this. When I drew it, there were no bars inside the parallel yet. I just drew it after tracing it. You know what this looks like right now, traders? This is what you have right now. It dropped from the top to the bottom, went up, hit the top, and then it went like that. And this is where we stand right now. As of tonight, Thursday night, that would be the 4th, I guess, right? Thursday night is the 4th for trading on the 5th of December. We have this market stuck inside of this parallel. Indicators are bearish. There's a report coming out tomorrow morning, which is unemployment. And if anybody on this planet thinks the unemployment report's going to be good, like, ooh, the U.S. gained 300,000 jobs, not a chance, right? So absolutely, this market should go down if you were a fundamentalist based on that alone. But it's Friday in a bear market. We've been going down constantly. We have these patterns that continue to repeat and keep working. Why shouldn't we go down again tomorrow? The indicators are bearish. I say the S&P and the NASDAQ have a red omni tomorrow. Now remember, this is what we look like right now. And we wrote this up. Remember, parallel. I know a little bit redundant, but I want you to get the picture here. Head and shoulders, parallel drop. Head and shoulders, parallel drop. Head and shoulders. Let's create a parallel and see if it stays in that drop. Well, what's really interesting about that is I have some charts right now to show you, which is exactly where the market is today. I know I drew it here for you, but I want you to see it for yourselves and get a taste for how you should do your analysis, because that was basically a simple projection based upon the last two moves. And that's what a lot of technical analysis is about. How you get projections based on formations. So traders, with no further ado, let's go look at the charts and then I'll come back to you. Okay, traders, the chart you are looking at right now is the exact same chart I showed you on the video for trading for 12-208 a few days back. And I simply said, look, big head and shoulders, parallel drop, inverted head and shoulders, parallel drop, inverted head and shoulders. Why not another parallel drop? Then I said I'll blow this up for you, and I'll just move this over so this gets a little wider, and you can see what that looks like. So, and it's the exact same chart that you seen a couple of nights ago. Now I'm going to show you the blown up version, just like I did a couple of nights ago, and then we'll go into the next chart. So bear with me for a moment. Okay, traders, this is again the exact same chart as the last video a couple of nights ago, just a little bit blown up. And as you can see, we had this parallel channel till it got just a little bit weird here for a while. Came right back up and stayed in a parallel and then created that inverted head and shoulders. Then created the parallel and came down to an inverted head and shoulders. So I took an exact parallel of this one and dropped it in place because the indicators were up and starting to point down and everything else looked bearish, and we just came back from the holiday weekend and the whole 9 yards. Everything was pointing towards down. So I needed a point of reference to get short, and I said I think if I draw this parallel in, we may actually stay within it. So this is what it looked like the night I drew the parallel. And now we're going to go look at where the chart is as of today. Okay, traders, now you're looking at an S&P daily bar chart, and it is updated right until the moment, which is Thursday evening, December 4th. Now, look inside this parallel. The market hit the top, hit the bottom, then came back to the bottom, went up and hit the top. The next day opened at the top and dropped all the way down to here, and we settled down here. Look at it behaving exactly as it did here. Exactly as it did when it got involved with this one. And it's probably going to do the same thing right here until we then break down and break out. And that's what I think is going to happen. And that is how you do analysis, traders. You don't always get this lucky where you draw a parallel that doesn't even exist yet and it fills in. But when you see something as repetitive as this, I mean, you go with that until it stops repeating. And I have taught many of my Omniacs that there is the rule of threes, that formations come in threes. Let's start off with the parallel, then the inverted, then the parallel, then the inverted, then the parallel. We need one more inverted. We'd have to drop down here to make an inverted head and shoulders. So it makes sense, traders, and it's behaving amazingly. It's staying right inside. So let's see if we can stay inside this channel. Let's see if it trades to the bottom of the channel. That puts us around the 780, 770 area. Somewhere in there, if we drop that low, that would be the next time we get to hit the bottom of that trend channel. Okay, traders, to bring this point home one more time, you are now looking at the Dow Jones Industrial Average Cash Daily Bar Chart. On that chart, I had mentioned back when we had these head and shoulders, there was this one, and only this one. And I wrote, the rest of this chart didn't exist from here back. And I wrote an inverted head and shoulders formation showing up in a bear market usually produces a muted rally at best and should be considered a continuation pattern. Well, you know what? That's what happened on this one. It's what happened on this one. It's what happened right here. And it's likely what has happened right here. Each time they produce a drop. Now, to add more fuel to the fire, connect all of these highs and look at how solid resistance this is right here. Just keeps bouncing off that resistance and dropping lower. So this is the Dow Jones Industrial Average. I don't see why we shouldn't end up running on the downside. Do your own homework, traders, and tell me what you think. So, you see those charts, traders? I mean, hey, that looks pretty sound to me. I'm going to go with that trade. We'll see what's going to happen. Remember, it's Friday in a bear market. This market, I don't know anybody that's going to want to go home long this thing. You never know what you're going to get on a Friday. But being that it is Friday in a bear, likelihood is the downside, at least after the report comes out. That should give us some kind of a push down. Traders, about that report, I mean, search your minds and think of any industry that's been hiring enough to make this report look good. The only chance the unemployment report tomorrow morning could look good is if it's less than expected of amounts of jobs lost, but I'll bet it's going to be more. We have lost 1.5 million jobs in this country since the beginning of the year, including tomorrow's report, which is expected in the 300s. That is huge, traders. You see car companies, you name it, car rental companies, car sales companies, like the three big ones in trouble now. Banking, everybody is laying off. Real estate, it's just gone. Forget it. No one's selling anything there. no refinancing, the banks aren't doing loans, a lot of things that used to be shipped back and forth. You know what? Let's talk about that even. Imagine all of the FedExes that have to go back and forth for all the business that goes on in this country. You know how much less of it? No house closings, you name it, in just about every single sector. There's people not even sending overnight mail. I mean, everything is feeling this, traders. Everything, everywhere. There can be, though, believe it or not, a real bright light here coming up in some, I don't know, a couple of months, who knows when. But understand this. I have said many, many times in front of this camera and at my trading academy that I think crude oil going to 147 was the ruination of the world's economies. No business could handle all of the extra money that they've had to spend for shipping, to receive goods, put gas in their car to go to the store. You name it. Expensive fuel hurts everybody everywhere on the planet. Every business, everything. It didn't just get expensive. It went to $147 a barrel. No one's ever dreamed it would be that high. And when it started to get up there, the world started to feel it and our economy started to crack. You can blame it on subprime. You can blame it on reckless betting. That's not what it was, traders. I am here to say it was absolutely crude oil that broke the camel's back. And now that crude oil is below 50, and actually in the low 40s it's going now, and that's where it is, if it stays that low, it's going to be the same catalyst that's going to start pushing us back up again. Now, I think we'll have to make a broad saucer-based bottom in order for that to happen. But you know what? If crude stays this cheap, our world's economies are going to get better. Even if you think that wasn't the reason why our economies got crushed, it's certainly going to be a reason why the economies can get better. People that were getting clobbered over the head for gas, just the average person that goes out shopping that was getting hammered with, almost $4 or $5 gasoline per gallon at some point, is paying under $2 now. Some people are paying $1.50. That gives them a few more dollars to maybe do something with. And that's a very small scale. Think about companies. Think about airlines. Think about freight. All of the extra money that they were just putting in to the high-priced shipping cost because of high energy, that's gotten cheaper. Those companies are going to start turning a profit. Now, if those companies start to turn a profit, guess what moves first? The leader of all of these, Dow Jones Transportation Average. So imagine this. If the transportation companies start doing better, the transportation average will start doing better, and that is the leader of the S&P and the NASDAQ and the ETFs, and it'll drag them up with us, or with it. So look, there could be a bright spot at the end of this tunnel, but not today, not here, not now. The way it took crude to go up that high, and as long as it took to get there to smash our economy, is at least as long as it's going to take to start to fix things. But keep that in mind. If crude stays cheap enough and stays here long enough, the Dow Jones Transportation Average stocks are going to get a boost, and they are the leader of the indices. So for all you bulls that are out there, sooner or later you're going to get a chance to be right, but it ain't today. Make sure you stay bearish. Make sure you stay on the seller of rallies mode until we have a big source of bottom. Do not fall in love with these upside rallies, traders. Not here, not now. You got Christmas coming. After Christmas, you got a plethora of bad reports that are going to come out. All the retail chains that didn't sell the inventory they expected to sell. Then again, all the shipping that didn't take place because all the presents didn't get bought, and so on and so forth. All of that's going to have to come out in the wash. Then all the layoffs in those stores for all the people who they can't afford because they didn't have a great end of year, that's all got to come out first. So all those wrinkles will come out. But if crude is still cheap after that, you may get your turn. We'll see what happens. All right, traders, so that's a bit longer-term view out there. That is not for short-term trading. For short-term trading, we got a red Omni in S&P and NASDAQ for tomorrow. My site, we are looking to sell into a rally. At my site right now, you can go and see the exact recommendation where we'd like to get in. where we want to deal, where the Omni would like for us to get out of the trade. If you'd like to see those trades, simply go to www.livewithoscar.com. Come on down to our site. Jump into the chat rooms. Go check out the Omni. Go play Omni slots. Go in the forums. Traders, it's all about teaching and learning. Our site is full of Omniacs. Hundreds show up in the chat rooms every day. Thousands log in to see what we're doing. It's a great community where you can learn to be a much, much better trader. And the mentality behind using all of this analysis and getting through those trades without psyching yourself out is what we specialize in teaching. So come on down and allow us to prepare you, after you learn how to do this analysis, how to stay calm when you get in those markets and don't lose your money. So if you think that sounds tempting and exciting, come on down and I promise I will do my best to help you traders out. All right, guys, is there anything else we need to do before I skedaddle here?
Yeah, don't trade alone.
Nothing? Bob says don't trade alone. He doesn't. I don't. My kids don't trade alone. Everybody shows up at the site. Traders, when we talk about don't trade alone, I can read stacks and stacks of testimonials from people that have told me, Oscar, the whole time I used to listen to you say don't trade alone, but I never really did anything about it. And I used to sit in my home and I couldn't figure out what was going on. And then I joined one of your rooms and now I feel like I'm with a community of people. We all help each other and so on and so forth. I got tons of letters like that, traders. So it's real. It works. So make sure you come on down and do yourselves a favor. Come join our community. No bullies, no bashers will ever be there. We are there to just help you trade and concentrate on markets. All right, traders, give me a call anytime, day or night, 702-629-4755. And always, always, always place stops. Always place them first. Remember, a stop is your best friend. And in these markets, without a stop, you will be hung. These markets swing larger than any moves anyone has ever seen since trading began. No one's ever seen such volatile moves last for so long. So, without a stop, you can be carried right out of this industry. Make sure you use your stops, traders. All right, traders, that's it. Remember, say this to yourselves every morning, every afternoon, every evening, because it'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.